How's everybody doing? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. This is the weekly banking update, the main show of this channel. And I am so happy to be back with everybody after about a week and a half off. I was away, traveling away at a banking school. And I would just like to give a quick shout out real quick if I can. I'd like to congratulate all of the year 3 students that just graduated from the ABA Stonier Graduate School of Banking. So congratulations to all of you. I think it's a tremendous achievement, and I wish all of you the absolute best in the rest of your banking careers, wherever those careers should take you. Again, I'd like to say a thank you to all of my colleagues and all of the faculty and the ABA staff at the ABA Graduate School of Banking, who do an absolutely wonderful job every single year, and just making that as best experience as we possibly can for all of the students there. I'd also like to say a special shout out to the Wharton School of Business at the University of Pennsylvania, who are kind enough to partner with us and host us every year for the program. They did an excellent job this year, as always, and can't wait to be back with everyone again there next year. So with that being said, I want to get into some banking news here, as always. We have so many good things going on right now. Just a couple of things. Had a couple other episodes this week coming out. I did just kind of a quick update on the Federal Reserve and their decision to basically hold rates steady this week. So if you want a little bit more information on that, check out that episode. I also did an episode about the bankruptcy of Synapsys, which is a very interesting kind of fintech bankruptcy, basically banking, BaaS, banking as a service. So check out that episode if you will. I did an update on the BRICS situation, with basically Saudi Arabia deciding not to renew their petrodollar agreement with the United States. That's actually huge news that happened this week. And then I might have one or two other episodes coming out. So just kind of like keep an eye out for that. And with that being said, let's talk about some economic indicators and stuff. So what are some of the things that came out this week? So we had 3-year Treasury auction on Monday, on June 10th. We got API weekly crude oil stock on Tuesday. On Wednesday, we had CPI numbers, consumer inflation expectations. We had interest rate projections. We had the FOMC meetings. On Thursday, we had initial jobless claims, and we had PPI month over month. We had the 30-year Treasury bond auction. And then on Friday, today, we had Michigan consumer sentiment, U.S. monetary policy report, and we had the U.S. Baker Hughes oil rig count. And I'll go over a lot of those numbers here in just a few minutes. And then what do we have coming up for next week? So for next week, on Monday the 17th, we have the New York Empire State Manufacturing Index. On Tuesday, we have core retail sales. We also have industrial production, 20-year Treasury bond auction, Atlanta Fed GDP Now numbers. We get the API weekly crude oil stock. On Thursday, we get building permits, continuing jobless claims, housing starts, initial jobless claims. And then on Friday, June 21st, we get manufacturing PMI, service PMI, existing home sales, Fed monetary policy report, and the U.S. Baker Hughes oil rig count. So a lot of economic activity coming out next week, getting some retail sales numbers, some construction numbers, some labor market numbers. So we'll keep an eye on that. So, okay, what do we got here? In the continuing saga over at the FDIC, as I have reported in some prior episodes, the kind of scandal that's happened over there at the FDIC with the report that came out has put their chairman in some jeopardy. So President Joe Biden has nominated Christy Goldsmith Romero as FDIC chair. So Christy Goldsmith Romero, a commissioner on the Commodity Futures Trading Commission, was nominated by President Joe Biden for chair of the Federal Deposit Insurance Corp. since Chairman Martin Gruenberg said he would step down. The Senate Banking, Housing, and Urban Affairs Committee will need to vote on Romero's nomination, followed by a vote from the whole Senate. Biden announced the nomination June 13th. So Gruenberg faced pressure to resign after a report found misconduct in the agency's workplace, but he said he would resign once a successor is named and confirmed. This was potentially an attempt to ensure a smooth progression of the Basel III Endgame capital proposal and other regulatory agenda items, such as the recent M&A proposal. Observers have said confirmation of a new nominee might not pan out. The Senate confirmed Grunberg for his current 5-year term in December of 2022. So, yes, we shall see what happens. I think that's positive. I am actually happy that at least, the president decided to nominate somebody else to take over, because I do not believe that Chairman Grunberg can remain in that position, given all the things that have come out there. So we shall keep an eye on that and see what happens. So, okay, let's get into some news. This is kind of interesting. Wells Fargo and Company fired more than a dozen employees in its wealth and investment management unit for allegedly simulating keyboard activity that created the impression of active work. Bloomberg News reported, citing disclosures filed with the Finance Industrial Regulatory Authority, devices and software to imitate employee activity, sometimes known as mouse movers or mouse jigglers, took off during the pandemic-spurred work-from-home era, the report noted. However, it was unclear if those fired were faking activity work from home, according to the report. So you got to give them an A for creativity on that one. New York Community Bancorp said its subsidiary Flagstar Bank, acquired in March of 2023, assets of, or I should say, they acquired in March of 2023 the assets of failed Signature Bank with an estimated fair value of $37.8 billion as of the transaction date. According to a June 16th filing, the estimated fair value included $24.9 billion in cash and cash equivalents of $11.7 billion in loans as leases. Net of initial allowance for credit losses. So Flagstar also assumed liabilities with an estimated fair value of $35.7 billion, primarily consisting of $33.5 billion in customer deposits, according to the filing. Let's see here. The CEOs of Canada's 5 major banks, Royal Bank of Canada, the Toronto Dominion Bank, Bank of Montreal, the Bank of Nova Scotia, and Canadian Imperial Bank of Commerce, reassured Canada's members of parliament on their commitment to fighting climate change, but said reducing funding for fossil fuel activities would take more time and more work needs to be done to reach zero emissions, Reuters reported, citing a rare meeting between the lawmakers and the bank executives via a video link. So that is a nice way of saying that they are dramatically pulling back on the ESG because, committing, suicide basically through insane ESG policy making is a bad move. So that is basically the most admission that you're going to get on them that the ESG was a bad idea, but we'll take it. We'll take that for right now. U.S. Securities and Exchange Commissioner Chair Gary Gensler told lawmakers the disclosure review process for the proposed registration of exchange-traded funds linked to Ether is working smoothly, and the final approval of the funds could come this summer, Bloomberg News reported, citing a June 13th hearing by a Senate Appropriations Subcommittee. Consumer Financial Protection Bureau Director Rohit Chopra urged lawmakers to consider open banking legislation, including measures protecting consumers' financial data, as he sees in talks with both lawmakers on both sides of the aisle a clear interest in doing more to protect privacy. Again, I keep saying this. I've talked about the open banking. I would suggest people go look at the episode that I did on that. I am not a fan of open banking. There's not a clear profit motive for banks to go down that road toward open banking. They want banks to open a portal that will allow companies such as PayPal, Google, Microsoft to connect APIs to the back door of the bank and siphon out all of your customers' data. I don't see how does that protect the customer's data? How does that, APIs are a major security risk, a major cybersecurity risk. Any cybersecurity expert will tell you that. And then to build these portals, you're talking about millions and millions of dollars to build out that technology. It's just not. I'm not a fan, and I don't believe that they have proven. They keep saying that this is going to protect consumers' data. Where's the proof of that? They still have not made. They have not made the case for that as of yet. Okay. Singapore-based blockchain firm Terraform Labs agreed to pay $4.47 billion to settle a U.S. Securities and Exchange Commission lawsuit over its 2022 collapse that wiped out $40 billion in investor assets and shook the cryptocurrency sector. That's an understatement. Bloomberg News reported, citing a June 12th court filing. Under a judge-approved settlement, Terraform co-founder Do Kwon, whom the court found to be liable for fraud after a 2-week jury trial in August, must transfer at least $204.3 million to the Terraform bankruptcy estate for distribution to investors and will be barred from serving as an officer or director of a public company, as per the report. Terraform had reportedly filed for Chapter 11 bankruptcy protection in the U.S. So if you have not checked out my cryptocurrency series, please go check that out. I talked, especially the first 4 episodes of that. I go over the entire crypto crash. I go over the kind of the origin of crypto. I go through kind of a 12-year period of time, the development of crypto, and then I get in finally into 2022 where, Terra USDA crashes, and then a whole bunch of other crypto firms crash, and then it culminates with the failure of FTX at the end of 2022. So if you haven't checked that out, definitely go check it out. Private credit is further encroaching on U.S. banks' territory and could soon start taking from their main lines of business, according to Regions Financial Corp president, chairman, and CEO John Turner. The Birmingham, Alabama-based company recently lost out on a lending opportunity to private credit, which is increasingly becoming more active in potential lending opportunities, Turner said in an industry conference. That's very interesting, and we will have to keep an eye on that. Okay, let's see here. Let's keep on rolling. So, okay, a whole lot of Citibank news here. So, while CEO Jane Fraser envisions Citigroup Inc. to be a global leader in wealth management, the third largest U.S. bank by assets could consider selling its wealth business, the Wall Street Journal reported, citing analysts from B of A Securities Inc. So, B of A analyst Ebrahim Poonawala Nana. I'm sorry, I butchered that name. It's anyway, pointed to factors including its inefficiency as a business with dismal 94% efficiency ratio for the 2023 fiscal year, the report said. And then a couple days later, Citigroup Inc. and other banks caught up in Singapore's biggest money laundering scandal are increasing scrutiny of their wealthy clients and potential clients to avoid exposure to illicit flows, Bloomberg News reported, citing people familiar with the matter. Citigroup wealth bankers were given a month to complete training on money laundering red flags, the report said. Citi was one of the banks operating in Singapore that reportedly held the largest amounts of deposits linked to 10 individuals convicted June 7th of money laundering. And then finally, Citigroup's wealth management business is riddled with issues ranging from a cumbersome account opening process to a disorganized system for managing client information, among other problems that has led to the unit lagging behind competitors at core markets of the business and a deterioration in experience and ultimately client trust, Barron's.com reported, citing an EY internal audit report reviewed by the news outlet. The report further said the wealth unit was not as lean as some competitors, despite the company's major organizational overhaul that involved sweeping job cuts, according to the report. A culture of funding surface-level initiatives rather than fixing foundational issues has further eroded experience of clients and advisors. The report said a Citi spokesperson said the wealth unit is a core pillar of Citi's strategy and that the company will put strong programs in place to uncover opportunities to improve, the news outlet reported. So those were three reports on Citi that came out a couple of days apart, and you see kind of the arc of that story. So the first thing is Citi CEO Jane Fraser comes out and says, we see ourselves as a global leader in wealth management, but we could consider that selling that wealth business. And then, a couple of days later, oh yeah, Singapore said Citi's potentially has all kinds of money laundering issues running through their bankers. Their bankers are basically a hot mess. They need to go to training, whatever else. And then we get this report that comes out that basically says that their wealth management business is riddled with issues, right? So quite the interesting couple of days and interesting release of information there. So obviously the Citi CEO knew that a lot of bad news was coming there and decided to try to get out in front of it by suggesting a possible sale of that business that is riddled with issues. So just interesting there. So, okay. Fifth Third Bancorp has begun to successfully lower commercial and wealth deposit rates without seeing much consumer attrition. Where we've really seen the most significant decelerations are in our commercial and our wealth and asset management businesses, CFO Brian Preston said at an industry conference. So that repricing is really behind us in both of those portfolios. We've actually been able to get a little pricing back as there continues to be just more stability overall in the funding markets. U.S. Bancorp reiterated its net interest income guidance, saying that migration to higher cost deposit types and increases in rates have continued to slow down. Truist Financial Corp is ready to grow loans after an infusion of capital from the sale of its insurance brokerage, but credit demand will have to materialize first. We're really serious about this pivot to offense and prosecuting a growth agenda, CFO Michael McGuire said in an investor conference on June 11th. The bank is not willing to loosen its credit policies and sacrifice return objectives, however. I think it will pay to be a touch patient here. Synchrony's Financial's adjusted net charge-off rate declined month over month in May for the first time in more than 2 quarters. The 30-day delinquency rate was trending down for 3 consecutive months. The reduction in NCOs and the declining delinquencies are in line with the narrative that we shared with folks, where losses in the back half of the year will be lower than the front half of the year, and you've kind of seen that peak really in April. So very interesting. So some of the banks are starting to test the waters now, such as Fifth Third Bancorp, U.S. Bancorp, in terms of, they want to try to, reduce their funding costs. They want to try to bring down some of the interest rates that they're paying on deposits. We will see how that plays out. I think a lot of banks are keeping a very close eye on what some of these other banks are at least attempting to do right now to see how ultimately that plays out with their customers, and if the customers will basically just hightail it out to other places where they can earn better yield. But we shall see what happens with that. Truist and Synchrony Financial seem to be in a good place, seem to be doing okay. Okay, let's see. What else do we got here? We've got, let's see here. The Consumer Financial Protection Bureau has proposed a new rule that would remove medical bills from most credit reports in an effort to improve consumer credit scores and discourage companies from sharing medical information with lenders and lenders from using that information to make lending decisions. The rule, if finalized, will lead to an improvement in credit scores of about 20 points on average for Americans. Now, this kind of continues the trend of basically removing things off of the credit report. So basically, for people who don't know, you have 3 major credit reporting agencies. You got TransUnion, Equifax, and Experian. And basically, so everything in theory is supposed to get reported to those 3 credit bureau reporting agencies, and then they create your credit score off of the FICO credit scoring model. But we've seen in recent years that certain collections, tax liens, things have been getting removed. Now they want to remove medical bills. I think you do. I'll say it like this. I wonder at what point do you get concerned because so much has been removed from the credit report that is it really an accurate predictor? And are there a lot of potentially bad things? A lot of delinquency, a lot of collections and stuff out there on a particular individual that you are missing in your underwriting process because these things are not being shown on these credit reports. So just something to think about. There are other ways I would say of finding this. You have like LexisNexis, you have other things out there that can do different enhanced search, but then you're talking about more money and then passing more cost on to the customer. Adding to the potential closing costs of deals and things of that nature. So we shall see. Okay, what else do we got here? Is there anything else I can get to? Here is U.S. Senator Elizabeth Warren urged Federal Housing Finance Agency Sandra Thompson to go ahead with rulemakings that would focus federal home loan banks more on financing affordable housing than supporting bank executives and shareholders. American Banker reported, citing a letter from Warren to Thompson. Warren suggested changes to FHFA membership requirements, noting that nearly half of Federal Home Loan Bank members have not originated a single mortgage in recent years. I really can't say how much I disagree with Elizabeth Warren on this. and I'm not going to sit here and say that maybe we should, you shouldn't take a look at the Federal Home Loan Bank or what's going on there. I mean, maybe there's a couple things that could be tweaked or whatever, but the Federal Home Loan Bank is a great organization. It has been there for banks for a long, long time. Provides lines of credits to banks across the country. A critical funding source for banks' liquidities, especially when they need it the most. And I just think that messing around with them, particularly at this time, is a bad idea. It's a very, very bad idea. So definitely not in favor of that. I'm definitely pro Federal Home Loan Bank. So okay. Customers of several fintech companies that use Synapsys financial technologies, I talk about this in another episode, to connect with a bank partner are reporting that they lost access to their funds in mid-May and are asking who can help. For reasons that Synapsys and its bank partner, Evolve Bank and Trust, are still disputing at a bankruptcy court in California, fintech partners of Synapsys, including Cooper, Juno, and Yoda Technologies have been unable to process payments for their end customers. So yes, that's a very interesting thing. This is also very interesting. The planned Texas Stock Exchange, aimed at challenging the dominance of New York Stock Exchange and the NASDAQ, has been met with skepticism from people in the industry, the Financial Times reported, citing rivals, traders, and investor advocates. CBOE Global Markets, Inc., the third largest U.S. stock market, said it has also tried to challenge the New York duopoly, but found it difficult on the corporate listing aspect, despite doing well on the exchange-traded fund side, the report said, quoting CEO Fred Tomczyk. So very interesting, happenings there with this whole Texas Stock Exchange. So we'll have to keep an eye on that and see, what happens there. What else do we have here? Okay, here this is kind of interesting. The Consumer Financial Protection Bureau finalized a rule creating a registry that will track non-banks law-breaking and attempt to detect and deter repeat offenders. Covered non-bank entities would be required to report orders related to consumer protection law violations, which the agency will compile and release to the public as a registry. When the rule goes into effect September 16th, non-banks will have to report any orders dating back to 2017. Any new orders should be registered within 90 days of their effective dates. So that's very interesting. We'll keep an eye on that and see what happens with that. Okay, let's move on to some other things here. Let's see here. So CFPB director says a level playing field is needed in CRA modernization. So let's see here. When asked whether credit unions should be subject to CRA-like requirements in light of Navy Federal Credit Union's allegations of fair lending violations, Chopra said the current CRA exemption provides the credit union industry a competitive advantage, which needs to be re-examined due to their public subsidy. He supports state-led and federal efforts to apply CRA to state-chartered non-banks and credit unions. Like that, don't disagree with that. Lawmakers pushed back against the CFPB's funding structure and called for the CFPB to be subject to the appropriations process. Agree with that. Additionally, lawmakers raised concern about CFPB's aggressive rulemaking agenda, particularly proposals to limit overdraft and credit card late fees, which would limit access and raise the cost of credit. Chopra highlighted trigger leads as one of the top concerns he hears from mortgage lenders and indicated he supports the goal of ICBA endorsed H.R. 7297 and Senate Bill 3502, the Home Buyers Privacy Protection Act, which would limit mortgage trigger lead solicitations exclusively to customers who provide their consent or lenders that have an existing relationship to the applicant. So yes, I agree with all that good stuff. Producer price index falls. The PPP index fell a seasonally adjusted 0.2% in May, but is up 2.2% over the last year, according to the Commerce Department. Consumer prices flat in May. The consumer price index was unchanged in May on a seasonally adjusted basis after rising 0.3% in April. The Labor Department said over the past 12 months, the CPI increased 3.3% before seasonal adjustment, down from 3.4% in April. House committee examines FDIC leadership. Yes, we talked about that. Fed announces release data for mega bank stress test results. So the Federal Reserve Board said it will release results from its annual bank stress tests on Wednesday, June 26th. This year, 32 banks and with 100 billion or more in total assets were subject to the Fed's stress tests. The scenario includes a severe global recession and heightened stress in commercial and residential real estate markets. The trade deficit grows in April. The goods and services deficit grew 8.7% from March to April. The Commerce Department reported year to date, the goods and services deficit deficit increased 2% from the same period in 2023. Consumer credit rises in April. Consumer credit increased 1.5% in April after declining 0.3% in March. The Federal Reserve said revolving credit, which includes credit card spending, decreased at an annual rate of 0.4%, and non-revolving credit, such as auto and student loans, increased 2.2%. Employers added 272,000 jobs in May. Higher than the average monthly gain of 232,000 for the past year. The Labor Department reported the unemployment rate edged up to 4%, with employment continuing to trend up in industries such as healthcare, government, and leisure and hospitality. But I cannot state this enough. When you dig into these job report numbers from the job report that we just saw, there's a couple of shocking things. Number one, what I would describe as the better or the best full-time paying jobs, you're just seeing this continual decrease of good full-time paying jobs. All of the job growth is in part-time jobs. You literally have a huge swath of our population here in the United States working 2, 3, and even 4 jobs to try to make ends meet, to try to be able to afford to live today, which is a massive problem. The more shocking thing is that all of the jobs are apparently going to non-U.S. citizens, i.e. all the illegal immigrants that have come into the country over the last 3.5 years. That's just a shocking statistic when you look at it. So you really got to take a look at these job numbers and really got to dig in. And then furthermore, a lot of the massaging of the jobs data has to do with seasonal adjustments. And there is an argument to be made that there is 1 million jobs that don't even exist and never existed and should basically come out of these numbers. And then you look back at the last couple job reports, and the job numbers have been revised downward again, suggesting that 1 million jobs number there's 1 million jobs that aren't there. So, it's again, you really have to dig into that jobs report to really understand what's going on there. I think these headline numbers are atrocious. And you've seen a pattern here for, I would say, the last, going back probably 15, 16 months, where I would say probably 15 of the last 16 months, the jobs report numbers get revised lower. They come out, you get this great headline number, and then it comes out and it's like, oh, well, they were 30,000 jobs lower. They were 50,000 jobs lower than what was originally stated. And this is the trend that we keep seeing. And this is why Jeremy Powell came out this week and basically even admitted as much, basically saying that, those job numbers may not be as great and as rosy as what's being suggested there in the headline. And what kind of gets me is that everybody, the news media, they grab the headline number and that's all they go with. They don't bother to dig in. They don't bother to look at it and say, hey, what's really going on here with this jobs report? So just things to, keep in mind there. So, and then small business uncertainty reaches its highest level since June of 2020. So the NFIB Small Business Optimism Index reached the highest reading of the year in May at 90.5, a 0.8 point increase, but still the 29th month below the historical average of 98. The uncertainty index rose 9 points to 85, the highest reading since November of 2020. And then we have credit union acquisitions break the record halfway through 2024 with credit unions buying banks. And you know what? I got tons more. I could literally probably go on for two hours. This is why I need to have a live stream. I think I'd love to, like I said, I really want to experiment with a live stream of this show. I want to kind of recreate this show into a weekly live stream because I think I easily have enough information that I could go for 2 hours. with a lot of this stuff. So that's why I would really love to experiment with that. Please leave a comment below if you think I should do a live stream, or if you think I should experiment with that. Like, let me know your thoughts on that. I would definitely love the feedback. But with that, I will basically wrap up for this week's episode. Please go on and check out some of the episodes that I just posted up this weekend. Make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please leave your comments down below. I love getting back to everybody. Again, congratulations to all of the Stonier graduates for this year. I applaud you all. Congratulations. It's just a wonderful achievement. Best of luck to everybody out there. Can't wait to be back. Already can't wait to be back there again next year. And again, like I said, with that, I'll wrap it up, and I'll see everybody again this week coming up. But have a wonderful weekend. Happy Father's Day. Happy Father's Day to all the fathers out there. I hope you guys have a wonderful weekend, and I will see you next week. Thanks a lot.